You think ICT is the holy grail? Think again, most traders fail using it, and here's why. ICT preaches the concept of smart money concept and their main concept is market models, liquidity grabs, liquidity sweep, order blocks, etc. So they use this method to trade in the markets, and people or retail traders watch the content for many hours and they think that it is very easy to succeed in trading with the help of ICT. But the thing is not like that. Let me explain to you why it doesn't work like that. Because two setups is never the same. The setups the ICT traders show you or the gurus show you is the only setups they took and it worked by the chance of God, because ICT concepts are too overcomplicated analysis, and it's not or ever good for a retail trader to even learn those techniques. You can say the ICT traders are successful, but are 90% or above 90% of the traders fail using ICT concept only. Let me give you a detailed breakdown of the total analysis. So this is a chart of Euro USD 30 minute. So I have taken here 5 trades, and all 5 my stop loss got hit. And what's the reason behind it? Okay, let me start from here. So according to ICT, I took a liquidity sweep. I took a liquidity sweep. Okay, I took a liquidity sweep from the down part here and got again a change of character or market structure shift. Here is the order block. I took entry at the order block and my stop loss was at the structural high. The market took my liquidity, came down and again went higher. Means there is no chance at this point the market to react to my place, and instead it just took my stop loss and went higher and higher. So now let's come for the second setup. Again same, we took out the liquidity sweep here. Again a change of character, took our trade at the order block. In a single candle our stop loss got hit. Now let me break down more trades for you. Now this is the third setup: a liquidity sweep, a change of character, order block, entry, stop loss taken. Again liquidity sweep, change of character, fair value gap, or trade taken, stop loss hit. And again here, it was now people will say these are the inducements happening in the markets. Okay, I believe that these are the inducements which are happening in the market. But according to ICT, market will go higher after taking liquidity or grabbing any of the order blocks or order blocks. So here is our the most serious order block at the most lowest value available here. So instead of reacting directly from here, the market even reacted from this place. The market reacted for two candles from this place, and the third candle it took my stop loss and went higher. But if ICT trading is so successful and so valuable for traders, why does my stop loss hits again and again? The only reason is that ICT traders fail 90% of the time, and the gurus tell you the only things which are not good things to be done by a trader or a beginner trader. They tell you the things which are really not valuable in their markets, because bigger institutions or hedge funds never use concepts like ICT SMC. They never use such cheap concept or newbie concepts. This is the only reason. They have their own methods. They never see the charts. They only follow terminals, because they don't even feel the need of seeing the charts and taking a trade, because they are highly trained and advanced. So using charts for them is just useless. So the concepts they teach you that ICT is really worthless in today's market. And now you can say there are time when ICT works. Okay, the ICT works just for 10%, and 90% of the time the ICT doesn't works in the market, and this is the harsh reality. The psychological trap of ICT. They manipulate people's mind by saying that they will win 100% of the time, and people, after losing thousands of dollars and even millions of dollars, they still believe in a concept like ICT. They follow it so blindly that they forget to see or use real price action which the market is indicating them. If the price action is indicating them to buy, the ICT will say them to sell. And this is the only point when ICT traders lose their trades, and the retail traders like me and you are always unsuccessful in trading. And I have discovered the harsh reality very soon, and I have taken an exit from ICT and SMC because I have saw the truth that ICT never really works in the real markets because banks and institutions never use ICT and SMC. They have their own terminal by which they can easily trade the markets and make really a good amount of percentage. So, what should you really do now? The only thing which you can do now is for to make your own concept, to make your own concept, or follow such a mentor who has really a proven A plus strategy. And they also provide you that the trade setup never works 100% of the time. It will work rather 80% times. So 20% times always you have to give your stop loss. Or if you don't want to give a stop loss, you can follow strict risk management to avoid the stop loss, or risk free trades to avoid the stop loss or the money you want to give the markets. So not just only blindly trusting ICT, you can just follow your own rules in the market which will make you really a profitable trader. What can be the rules in the market to be or avoid ICT traps? So the rules are: don't don't watch ICT content blindly. Don't believe theories. Next topic is don't believe theory, believe only executions, believe only A plus. Never believe theory totally, because theory is just a conception, but the real execution is what you really need in the market to be successful. You need theory and real concept, real execution in the markets to be really successful. Then the most important, which is the which is most important in the markets to ever be successful, is price action. If you don't really know how the market is reacting, what the market wants to teach you or show you, you can never be successful in trading or even make a 0.01% from trading. You will still lose the market in thousands of dollars or millions of dollars. So, if you ever want to be profitable in trading, you can just follow a mentor who can really teach you the real way of trading. Now, they will say, how do you trade? I have built my own strategy. The name of the strategy is ATC, meaning Artisan Trail Concept. The concept is really very simple. I will give you live execution of the trades. Okay. Now let me remove all of this marking so that I can easily explain you what is ATC. Okay, let me remove all. Then I will explain you what the thing is ATC. Okay, it's enough. So according to price action and my ACT strategy, so you can see the market was in a quite bull. The market was quite bullish from this place. It was very bullish from this place. Okay, it is bullish. Now after this point, the market really gave me a not a shifting structure. Okay, did not give me still. Yes, at this point it gave me a shift of structure, or from higher high or higher low it gave me a lower high or lower low. It's a simple concept of price action or my ATC. It have given me a lower low, so we need another high lower high to proceed. So I will mark my zones based on my strategy. So according to this, the zones which is really important for me is this point. Okay, this is the point. I won't use red and I'll use my area of interest zones. So the price came here, but I can't really take the trade at this point because it is not allowing me to take the trade here. I will just move down simply to a lower time frame, maybe 5 minutes as you say, and just wait wait for a good reaction now because it swept the previous high. I came here and just waited for you to give me a good signal or a good red candle. It swept and gave me a quite good candle. Not even wait, let me check once again. Was this the point? No, not even this point. After sweeping, yes, it's good. Yes, can proceed now. Okay, now this is the point. It swept and gave me a good red candle. So what should I do now? I took the trade from this point, and this is the real execution I did, and I also took the trade. Okay, I took the trade from this point and just kept my targets for the next structural low. And as you can see, I just got my 3:3 or 3:4 RR trade. It's really quite simple. Now, let me explain. Even some will say that you have marked a zone. Wait, let me. You have marked a zone at this point, and say the stop loss got hit. Now, I still have a logical explanation for this answer. So, let me mark my zone as for my needs. Okay, okay, I got it. Now, let me mark my zone. This is my zone. This is really very important for my ATC strategy. Now I will wait for the liquidity sweep. Now let me go to my zone at lower time frame, and after sweeping liquidity, my liquidity zone. So my liquidity zone stands out here. Liquidity zone stands out here, and so I will check for if any of the high interest zones are lower below in any of the time frame. So I can see even after sweeping this liquidity, I have another zone which is lower below this point. So I will just mark out this point. Okay, I have marked the point. Let me go to my entry time frame. I came out here, I reached here, and it gave me a good candle. It gave me a very good green candle. I entered my trade here, 10 pips SL, and I will just, as it is a 1 hour area of interest, so I can take my trade to a higher value. So where I can see the stop loss was resting of retail buyers, I can see the stop loss resting at this point. So I will just execute my trade and a 6 RR trade. But people will say it is just theory. But I want to say it's not a theory but a real concept built by me. And the winning rate of this ATC is 80% plus. And if you follow strict risk management and understand the market very nicely, you can take it up to 90%, which is a huge percent for a good trader. Now, if you also want to learn this strategy of mine, comment trader and I will send you the details of this strategy. And I hope this is a very valuable content for you, and I will be coming with my next content soon.